Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which is a great crypto platform that I've been using since 2017. So I can definitely vouch for this platform. I still use them to this day. You can buy, sell, trade cryptocurrencies, as well as precious metals and equities. Uphold has 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you want to buy and sell on them, but you should custody your own crypto, not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. All right, my friends, Bitcoin is making a move to $25,000. We had a breakout today. Bitcoin is currently sitting at $24,587. Alter following, looking strong as well. If we look at the chart here, the one I've been sharing with you guys for 6 months now, or over 6 months, where we've been talking about Bitcoin doing its retracement to possibly $40,000 to $50,000. And when you look at it here on the weekly chart, it's looking like that's what it's going to do. So looking bullish, but as always, you want to be cautiously optimistic. We are in uncertain times from the macro perspective because of the Fed, inflation, and so forth. But let's hope things move in this direction. It's the retracement like we saw in 2019 after the 2018 bottom. And I will be taking profits if Bitcoin goes to $40,000 to $50,000. I'll take some profits on some altcoins as well, because the alts are going to pump behind Bitcoin. And once Bitcoin rolls over and corrects and retests some lows and so forth, I will be dollar cost averaging again, preparing for the Bitcoin halving next year. That is my strategy. I'm not telling you to do that. You should do your own research, but I'm doing this based on my experience in the with the market in different cycles. And certainly you want to take profits because, look, at the same time, the SEC and a lot of regulators are coming down on crypto, right? We're seeing a lot of enforcement actions. It's not just the SEC. So we do have to be careful here. So I think, if the price goes back up, not to new all-time highs, but just at a retracement here within the next few months, it's probably a good idea to take some profits, right? Just make sure you get some money if you need it. So if you don't, and you're like, hey, I don't care, I'm going to wait another 2 years for the 2025 peak, that's fine too. You got to do what's best for you. I have my long-term hold bags that I'm, holding for the 2025 and then 2030 bull runs and so forth. But I will be taking profits along the way because I am here to make money and I have plans and I have things I want to do, right? As I'm sure many of you are looking to do as well. So once again, this is just what I'm doing. You don't have to follow me. Do your own research. And I'm here to just share the knowledge and the education and things I've learned and the market cycles and how they're playing out. Let's jump into the news, guys. We got some big updates. First, we're going to talk about Sam Bankman-Fried's bond signers, and we got some very bullish news about crypto globally. But first, the two signers of Sam Bankman-Fried's bond have been court-ordered release. They are Andreas Potke, if I'm saying that right, Stanford research scientist, and Larry Kramer, former dean of Stanford Law School. Boy, Stanford not looking good right here with this news, right? Now, of course, Sam Bankman-Fried's bond was $250 million. And of course, his parents are heavily connected with Stanford. They're connected with the government. Sam Bankman-Fried made tons of political donations in the millions to both Democrats and Republicans. And, we've all been wondering who helped, sign this bond. And it's being revealed here that the Stanford folks did. But here's the thing. I don't think they have $250 million or millions of dollars to put up like this. So I think this is kind of a face to the bond, but the money, I don't know who actually put up the money is what I'm trying to say. I don't think these Stanford research scientists had millions of dollars and so forth, and a former dean has millions of dollars to help Sam Bankman-Fried. I think that money came from somewhere else to help Sam here. And of course, this guy Sam Bankman-Fried should be in jail. He is a scammer, and it's unbelievable that he's home at his parents' house and he's on the internet and sending newsletters and so forth. I believe the judge recently was trying to block his internet access. We know that he's been trying to move funds. He claimed he only had $100,000 left in the bank, but we know he has millions in crypto in different wallets, guys, because they were doing a lot of shady stuff at FTX with Alameda and so forth. But my hope is that justice will be served and this man will go to jail, just like Bernie Madoff, because he is the Bernie Madoff of crypto, and he really screwed us in DC. I've talked to politicians and advocacy folks and groups who are working in DC. This guy set us back big time, but we'll get past it. It just sucks because we had this great momentum going. We had this credibility, and he shattered that credibility for the most part. So let's hope justice comes around here and he goes to jail. Let's move ahead because the SEC is updating custody rules, how crypto companies and assets can be custodied. Now, here's the thing. You all know I'm a big critic of Gary Gensler and the SEC because they have not put out the clear guidelines that's needed for 2023 modern day assets like cryptocurrencies that exist on blockchains globally, right? Gary's trying to call stablecoin securities. He's trying to say crypto staking, where you stake your coins on the network, securities. He's trying to make everything a security. This is a political power grab. He's trying to just grab as much as he can, as much of the slices on the pie, right? This is about power that he's trying to do. However, this rule here, this custody rule, I don't think this is a bad thing. In light of what the hell happened last year with Celsius and FTX and so forth, and many of you who are watching or listening to this have your funds stuck on Celsius, have your funds stuck on FTX, right? This is not a bad thing. It's kind of saying, hey, exchanges, you have to use a qualified custodian. And we saw last year BNY Mellon, America's oldest bank and the largest custodial bank, launch crypto custody. And I believe that these crypto companies, they should not commingle funds like FTX did. And I'm not saying all of them are, but the potential's there if they're like startups and small ones. It's best that they work with qualified custodians and they're transparent, right? That they put it out there. Hey, we're using BNY Mellon. Hey, we're using Fidelity or Coinbase Custody, right? Which Coinbase Custody is a separate entity from Coinbase, the exchange. And we know Coinbase is regulated. So that's the gist of it. And Ram Abwala, he's a crypto CFA. He tweeted out the following. He summarized it really well. He said, the SEC is proposing a modification to the custody rule that impacts crypto. Here are the winners and losers. 1, big winner, Anchorage, the only national bank that can custody crypto. Anchorage has a monopoly. So Anchorage, I interviewed the CEO, I believe 2 years ago. I'll try to get him back on, but they had gotten the green light from the OCC to custody crypto. They were a crypto bank, so they're going to do well here. Number 2, Cowen. Many of you may recall my interview recently with the head of digital assets at Cowen, and Cowen works with PolySign's standard custody, Jack McDonald and those folks. He says here, bank-backed prime brokerage, the first bank to do prime brokerage and fill the gap from Genesis. He said, number 3, runner-up winners, trust banks like Coinbase Prime, Gemini, etc. The license is good, but does not enjoy federal preemption like 1. Losers, pure exchanges without a banking license or trust bank. So once again, I don't think this is a bad thing. I think if the exchanges, we saw after the FTX collapse, many of them put out proof of reserves and they did their Merkle tree audits. That's great. But at the same time, it would be ideal if the funds for the customers are put in a qualified custodian like your BitGoes and BNY Mellon, right? Just throwing it out there. And these bigger institutional players, because we know they have federal insurance. They've been around a long time. They know what they're doing, so on and so forth. And it eliminates the potential for commingling of funds and fraud like we saw from Bankman Fried. So I think this is a good thing. Right. I don't agree a lot with the SEC and Gary Gensler, but I think this is a good thing. Number 4, he says non-consensus winner, a decentralized MPC solution for bankless crypto natives and their advisors. This technology would enable clients to control their keys, digitally sign, custody on chain, all while still enabling advisors to advise compliantly. Now, with that said, I custody my own crypto. I hold my private keys. I have hardware wallets. I've talked about it for years. I use the Ledger devices, and I know many of you do as well. However, for the next billion users that are coming in, the moms and the pops and the people who are not tech savvy and people who are not as passionate about the technology as we are, they're going to want to, make sure their funds are safe, and they're not going to want to deal with private keys and so forth. I'm not saying all of them are not. I hope you guys understand. It's about demographics, right? There's going to be some that are going to get it. Like, yeah, I'm going to custody my own crypto. It's going to be some that's like, you know what? I kind of want BNY Mellon to custody my crypto. I want to know my funds or my crypto assets are in a custodian that's well known, a Fidelity and so forth. So that's the nuance of this. And I think this is a good thing. I think it really helps to stop the likes of Celsius from happening again, the likes of FTX from happening again. So I think this is a good update. And, certainly want to hear what you guys all think about it. Now, despite all the things that have been going on, the negative news about crypto, there's a lot of building happening, my friends. Very bullish news. So the CME, they're going to launch event contracts on Bitcoin futures on March 13th. So the building and the innovation continues, despite, once again, all the things that are happening. Now, here's a really big update because it's a stark contrast as to what's happening here in the United States. The EU is now accepting applications for its blockchain regulatory sandbox. The sandbox, which will run for the next 3 years, is open to companies from all industry sectors and public entities, with priority given to more mature projects. So the EU and many other big countries are leading in crypto, while the US is lagging behind, and you have these draconian regulators and political overreach and all these things happening here, which is sad. The innovation should be fostered. Yes, you have to stop scammers. Yes, you have to weed out the bad actors, but you can't stifle innovation. So the European Commission's blockchain regulatory sandbox or testing environment aims to facilitate the cross-border dialogue with and between regulators and supervisors on the one hand, and companies or public authorities on the other hand, an official announcement said. The initiative is part of a EU funding program to bring businesses, citizens, and public administrations to the digital age. The bloc is also exploring how DLT-based solutions could help cut intermediaries in securities trading, with a pilot due to begin in March. So in the EU, you don't have any securities and commodities. Cryptocurrencies are seen as virtual currencies, and they're fostering the sandbox. Come in, let's work together, right? They're not doing what Gary Gensler is saying, come in and talk to us. And he's just there. It's like a mouse trap, right? He's got the cheese. He's got the the trap ready. You come in, you tell him stuff, and he's like, okay. Gotcha. He's taking notes. He's recording. You leave there thinking that you're going to work together. Then all of a sudden, boom, lawsuit. He's going to try to get his pound of flesh. Give us $50 million, or this is going to happen to you. And this is a situation we're in. It's not in good faith, right? He's not trying to help these companies. He's not trying to protect retail investors. He's just trying to do the shakedown, like the mob, guys. It's like Tony Soprano, right? Now, here's some other big news. Interactive Brokers has begun offering cryptocurrency trading to professional traders in Hong Kong in partnership with crypto exchange OSL. So Interactive Brokers is pretty big, and they have rolled out Bitcoin and Ether trading to the professional investors in Hong Kong. Eligible clients include individuals with over 8 million Hong Kong dollars in investable assets and institutions with over 40 million Hong Kong dollars. So you see what's happening here, my friends? Innovation, expansion, and building happening globally. That's the one great thing I love about this asset class. It is a global asset class. It's not specific to the EU. It's not specific to the United States. So despite what Gary Gensler and these clowns do to try to stifle it, they can't stop it. They'll slow it down, but it'll keep moving. And guess what? The technology, it's easy for it to migrate to other parts of the world where there's regulatory clarity. But, as we talked about, Gary's trying to slow this down for the incumbents to take their positions. And it sucks that that's happening, but, it's pay to play. And Gary's a puppet for these banksters. So Interactive brokers and OSLs aim to allow clients to invest in Bitcoin and Ether via a single platform alongside stock, options, futures, bonds, and so forth. Yeah, it's amazing, guys. This asset class is growing, and it's just throwing into the mix with the traditional ones like stocks, bonds, and so forth. The two firms teamed up to introduce crypto trading in Hong Kong in June, citing the city's high concentration of institutional and professional investors. Mixed signals have come out of Hong Kong in recent months regarding future regulatory environment for crypto. Its Financial Services and Treasury Bureau said in October it was exploring allowing retail customers to trade crypto or approving a crypto exchange traded fund ETF. So things are moving ahead globally. Companies building and expanding. Very bullish news. Here's some more bullish news, guys. So Hub 71 has launched a $2 billion initiative to back Web3 and blockchain technology startups in the Abu Dhabi region. These folks recognize that this is the future. This is what's going to drive GDP. This is what's going to drive the next layer or segment of the economy, guys. So let me give you the details here. The Hub 71 Plus Digital Assets Ecosystem Initiative will also provide startups access to a wide range of programs and potential corporate, government, and investment partners, according to a press release on Wednesday. The program will also support businesses relocating to Abu Dhabi and promote startup growth in the Middle East and global markets. The initiative will be based at Hub 71 in the Abu Dhabi Global Market Financial District. Fabric, yes, as in FABRIC, the research and development hub of the First Abu Dhabi Bank, is the anchor partner of the initiative, which also includes crypto exchanges and service providers. Very bullish news. This is why I'm bullish long term, despite in the short term, you got, once again, these clowns like Gary Gensler trying to slow us down here in the United States. Things are moving ahead globally, and they can't stop it globally, right? The SEC doesn't operate in Abu Dhabi and in the Middle East or in Japan or the Asian markets or whatever, right? They don't. Here's another example, my friends. Brazil's largest public bank enables tax payments to be made with crypto. The service will operate in partnership with BitFi, a startup focused on blockchain solutions. Let me give you the details here. The service is now or is only available to customers with cryptocurrencies deposited with BitFi, a startup specializing in blockchain solutions with BB's corporate venture capital arm has invested. Other BitFi clients, and by the way, BB is Banco do Brasil. Do Brazil, if I'm saying that right, which is also known as BB. This is Brazil's largest public bank. Other BitFi clients, such as financial institutions and fintech companies, will also be able to allow their customers, their users, to pay taxes and other obligations using agreements signed by BB with various public service entities, the bank said. Folks, go look at Latin America and South America and Brazil. These are huge markets, huge populations. And the largest public bank saying, hey, you want to pay taxes and stuff with crypto? Yeah, that's not a problem. We'll take it. They know the value. They see the value. They wouldn't be doing this for fun. They're not in the business to lose money, my friends, right? You got to look at the financial aspect to this, the business perspective. They're not doing this for fun. As like, oh, yeah, let's try this. No, they want to make money. And if they can get these assets, people pay with them, they can then use it to their advantage. One, they can hold it, right? And when the price goes up, they sell it. Two, they use it and then sell it back to users, right? In different ways. They can also trade with it, so they know the value. So here's a quote. The new digital economy is a catalyst for a future full of advantages. This partnership makes it possible to expand and use and access to the ecosystem of digital assets with national coverage and with the seal of security and reliability of Banco do Brasil. Lucas Schoch, if I'm saying that right, the founder and CEO of BitFi, said in a Portuguese language statement. Very bullish news here, my friends. It's happening globally. I just told you guys about Abu Dhabi, the EU, Brazil, obviously South America, Hong Kong, right? Very, very bullish news. Here's some great news. I know some folks who listen and watch this podcast are not into NFTs, but as I've stated about NFTs, you don't have to own NFTs, but you could be bullish on the technology and the building that's going to happen on the blockchains of the tokens that you guys hold, whether it be Algorand or Hedera or HBAR, I should say, or Cardano or XRP, right? If you hold a native token of these blockchains and the NFTs are being built on them, the more adoption, network effect, Metcalfe's law, the more building, the higher the value of the network, which will that value trickles down to the native token. We saw it happen with Ethereum and, of course, some other networks as well. So new Lamborghini NFT collection revs up for release on Vivi. The digital collectibles will feature the Huracan STO model of the iconic luxury sports car brand with different rarity traits. So you may not care for Lamborghini, you may not care for supercars, you may not care for NFTs, but you better be bullish on this news and see this for the value that it brings to the tokens that you are holding, my friends. And NFTs, whether you like it or not, that tech will be used in various industries. You will be using NFTs eventually, whether it be for concert tickets, airline tickets, whatever it may be. And you may not even know it because it will be running in the background, my friends. And this is just bullish news when I see this. You have some of the biggest brands in the world building. And once again, this is not just a JPEG or here's a new, I don't know what, here's a new GIF or whatever it is. This is minted on the blockchain. Think about it. Very, very bullish news here. Now, crypto giant Binance expects to pay penalties to resolve U.S. investigations. This is according to the Wall Street Journal. This is all par for the course. As the market gets, becomes regulated, you're going to have folks like Binance and so forth. They're going to have to pay their penalties. So I expect to see more of this. But this is going to be a drop in a bucket for many of these companies like Binance. It's better you just pay and get your licensing and get your things in order and move forward. Finally, guys, the Flare airdrop distribution. We got an update here from Flare that it will occur on March 17th. Allocations will be calculated based on average wrapped Flare holdings from the 3 random blocks during the previous 23 days. So they put out a schedule here when the different distributions will happen. This goes into 2026. So you got March 2023, April, and so forth. So, if you're a Flare token holder, you were an XRP holder that participated in the Flare snapshot, you'll be getting these. I did, and I'm, of course, delegating my Flare tokens. I know there's been a lot of drama around Flare. I don't personally care for all this stuff because this is like a free token and I'm just like, okay, I don't want to waste my energy on this. I'd rather take that energy and look into new coins or swing trade and make money, right? If these airdrop tokens turn out to do well, then it's easy money, but I'm not going to lose sleep over this. So just heads up on this, guys. Anyway, let me all know what you think about this. A lot of bullish news, a lot of changes happening in the market. Let's see what Bitcoin does if it continues to move upwards and it can crack $25,000 tonight or tomorrow. And, if it keeps going higher, my friends, I'm looking for that retracement. I want to take some profits and, use that cash accordingly. Let me know what you guys think, and I'll talk to you all later.